Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, making professional trading simple. End of the day. Ding ding, there goes the bell. And here we are again, working our way back down the trading range we've been in for about a month now. So this held very well up here. The paper trade I took with one of my students up here at 10502 is paying off handsomely. I am very rich on paper. Impressive that this has held. Once again, we had a test. We had another test. It spends a lot of time up here. But as we've seen time and time again, eventually it has failed and is heading its way back down here to the bottom. We will see if it makes it there by morning. It's not that far away. Only talking about 50 points here on the Dow. It's about 5 points or so on the S&P to get itself back to the 1085 mark. So things are still holding very well in here. If you are playing this long at support and short at resistance, you are making money on the indices. If you are trying to intraday trade this, it's been very, very difficult to make any money. I did mention yesterday that if some volatility was going to happen, we had not seen it Monday, Tuesday, Wednesday. I expected to see at least one good move during the course of the week. Today was a decent move. Problem is, once again, it starts with a gap in the morning, and it's very hard to play those. So you have to be on your toes all day long if you're going to be playing these moves in the indices. You're still better off to stick with the individual stocks and try to find your plays that way. So where are we? Well, you can see we're below the 200 on the 60-minute. Breaking this level here, I don't see why we can't and don't retest once again this 10-250 level. Looking at it from a daily, I made mention to my subscribers that I thought the indices would try, or would at least try to make an attempt to get up above certain levels, and they were not able to do that in most cases. Made comments to them today on the FTSE, the Russells, and the Dow and the SPX, and you can see that we were not able to do any kind of a late day run. Market's closing down right at its lows. After breaking the 20-day moving average, just not able to retake that support level. So I see absolutely no reason why we don't reach this 10-250. Are you brave enough to take it long at that point? It's not a bad trade. Certainly something you should be thinking about. You can set a very tight stop below it. You know that my level is 10-200 below that. So a break of 10-250. If you want to go long at 10-250, I would still say that a break of 10-200 would be where your stop needs to be. NASDAQ on a 60-minute, you can see it breaking down as well today. Down below the 1780 mark, which, if we scoot over here to the daily, you can see I mentioned would be a good place to get short. But you probably didn't get a chance to enter until very, very late in the day. We're only less than 2 points below it, even at this moment. On a weekly, you can see it start to pull away from this overhead resistance, but it's not exactly blasting away from it by any means. Still in what I consider to be a high base formation until we break this area down in here. SPX on a 60-minute, you can see it coming back down here to that 1095 level. Mentioned that below 1100 would get us back to 1095, and then 1090, 1085. I really think we break the 1095 mark. I think 1085 is completely achievable, which puts us right back down there at the bottom of that trading range we have been watching for a while. Excuse me. And you can see a lot of chop action even today. We did break the 1100, retest 1095, and that's where we ultimately ended up. But very difficult to trade the indices when they're only moving, in kind of 5-point increments before they take another turn again. From the daily standpoint, I really was watching to see if we would get a close above 1100. A late day surge to the downside did not allow it to even get close to the, well, I shouldn't say close, but didn't allow it to even take a shot at that 1100 mark in the last few minutes of trading. And you can see we got right back down here to 1096. So now I'm watching very closely the 1085/1087, 1087 because of the 50-day moving average rolling up and over here. That is still the magic level for the SPX to get below there. So once again, do you feel lucky, punk? 1085 would be a defensible place to get long. Why? Because, I don't know, it's only held 1, 2, 3, 4 times in the past. Yeah, pretty strong support, and you could put a very tight stop beneath that. And your risk to reward ratio would be pretty large on a trade like that. SPX on a weekly, done with Thursday, once again starting to move back down. Watch this closely tomorrow. I don't expect us to break this overhead resistance tomorrow. Maybe I'm not even going to make any assumptions as to what happens tomorrow. I just think that as low as we are right here, I see absolutely no reason why we can't retest that 1085 level one last time coming into the Christmas week. VIX on a daily, you can see it moving up with this, but once again, as long as I'm just going to call it this, below this 23 and at this 21, anything in between 21 23 is still not showing any major fear at all in the markets. It's just chop. And this doesn't show me any major concern coming out of the markets whatsoever. I would expect that to continue over the next week or so. Here we are trying to come back up to this overhead resistance, but it's still just over the 1, 2, 3, 4 weeks, 5 weeks of basic sideways action in the VIX. There's just nothing to be concerned about here. Down 3.